Good morning, ladies and gentlemen. Good morning, good afternoon, good evening, wherever you're joining us, anywhere, wherever in the world. Fintech Association of Nigeria is the foremost fintech association in Nigeria. And the Intercontinental webinar is one of our flagship events. The next one is the Nigerian Fintech Week, which holds October 25 to 29. And the good news is just this morning, we just got a bonus. The Singapore Fintech Festival just signed a partnership with us to host the World Fintech Festival in Nigeria. So there will be, from the 8th to the 12th is the World Fintech Festival in Singapore. And on the 11th of November, there will be a session just for Nigeria, which will be hosted right here in Nigeria. So that's a bonus. So if you're a fintech, you're a startup, Fintech Nigeria is the place to be. So welcome to today's webinar. I'll hand over to the president of the association, Adebayo Masi, takes us through today's event and to introduce our panelists. We have the best in the world to take to this topic. Thank you.
Thank you very much, Babatunde. I welcome you all to this exciting webinar dealing with what is possibly the most important subject in financial services evolution and disruption today. Paul Volcker, a former head of the Federal Reserve, famous for what became known as the Volcker Rule after the last financial crisis, in 2008 grumbled that banking's last useful innovation was the ATM. Was it wrong? It might have been correct prior to 2008, but clearly did not see what was in stock beyond 2008. That is what disruption causes. Since the crisis, the industry has raised and changed its game. It has moved from digitization to digitalization, rode the digital transformation wave, and is now driving the post-COVID digital surge. The distributed ledger technology has been instrumental to this impending disruption with several applications from cryptocurrencies to the new central bank digital currency, or GovCoin, as is now recently being coined by The Economist magazine. For the sake of the uninitiated, a CBDC or GovCoin refers to the digital form of a country's fiat currency, such as the Naira, that is also a claim on the central bank. So instead of printing money, the central bank issues electronic coins backed by the full faith and credit of the government. This is perhaps the most attractive attribution of CBDCs, the fact that they're centralized and backed by the sovereign, unlike regular cryptos, such as Bitcoin and Ethereum, which can be deemed as volatile and speculative. And for these reasons, many countries all over the world are investing substantial amounts in research, testing, and deployment of CBDCs. As of November 2019, the United States has raised a whopping $15 billion for several initial coin offerings and pilot projects. The benefits and implications are many. It empowers central banks to manage money to the last mile, disburse financial assistance to the most needy, and even track how it's spent. However, the huge optimism brought by CBDCs must be treated with realism and humility. In the quest to creating a new order, they raise huge questions that need to be carefully addressed. It could disrupt retail banking, lending, and access to finance as we know it today. There are some claims that CBDCs have the potential to be highly disruptive, particularly as central bank balance sheet grows, and deposits could be pulled away from commercial banks should individuals decide to hold CBDCs in large volumes. Other economists will point out that cryptocurrencies generally are not easily convertible into legal tender, which is still needed by lower income groups and for day-to-day experts. However, organizations such as MasterCard have worked with countries like the Bahamas to create cryptos accessible via prepaid cards, eliminating that kind of issues, and technology will keep evolving accordingly. The question we ask today then becomes whether the implementation of CBDCs is the best step forward to improve financial stability, or perhaps other mechanisms such as currency boards and pegged exchange rates will better suit the country's financial needs. Over 50 monetary authorities representing the bulk of the global GDP are exploring digital currencies. The Bahamas has issued digital money. China has rolled out its e-yuan to over 500,000 people. The EU wants a virtual euro by 2025. There's the Bitcoin, and the Central Bank of Nigeria has announced that it will be developing its own CBDC. The incarnation or metamorphosis of money. is now truly underway. Well, without much ado, let's go right into the business of the day, and let me introduce our panelists for today. We have a very distinguished set of panelists. I'm going to read their profile. I think it's very, very important, so it puts proper context on who we have talking about the subject today. And let me start by introducing John Rowe. Very, very happy to have John here with us. He's the Central Bank Governor of the Bahamas, and obviously who else to lead and be part and parcel of this conversation than a country who has the authenticity to claim a gov coin, so to speak, really. So Mr. Rowe was appointed governor of the Central Bank of the Bahamas in January 2016. Prior to this, he served as a financial secretary in the Ministry of Finance, and before this, he served as the executive board of the He served on the executive board of the International Monetary Fund as a senior advisor to the executive director for Canada, Ireland, and the Caribbean constituency. The governor's substantive career from 1990 to 2012 was also in central banking in various economic policy and research capabilities. In addition, he has contributed as an adjunct rector in economics at the American University in Washington, D.C., and for many years as a part-time lecturer in economics and statistics at the College of the Bahamas. He holds graduate degrees in economics from the American University in Washington, D.C., Carleton University in Ottawa, Canada, and is an undergrad of the University of Western Ontario, Canada, and College of the Bahamas. Our moderator is Kamel Cadet, CEO MTech, a passionate advocate for financial inclusion, economic development, and a former finance and business executive of IBM. Kamel is now the founder and CEO of MTech, a fintech for the modern central bank. With former regulators, technology experts, and innovators as advisors, Kamel is building a portfolio of modern central bank software that delivers a more inclusive and resilient financial infrastructure. For the last 3 years, Kamel worked in digital currency technologies and strategies for the purpose of addressing financial inclusion and lowering the cost of cross-border payments. As a thought leader in the central bank digital currency space, Kamel engages with central banks from Africa to the Caribbean to enable their transition to the digital currency era in an inclusive way. A native of Haiti, she speaks French and Creole. I also have here with me Sere Che, the Assistant Governor, National Bank of Cambodia. Sere is an Assistant Governor, as I said, of the National Bank of Cambodia. Since Cambodia is a highly dollarized economy, she, as a central banker, is a vocal proponent for greater use of the local currency to promote the country's greater independence on economic and monetary policy. Under her guidance, innovative policy instruments were introduced to develop the interbank markets and promote the use of the local currency. Sere is also a member of different policy-driven committees within the bank and nationally. She's chairwoman of the Credit Bureau Cambodia Limited, the first and only privately run credit sharing system in Cambodia. As a chairwoman of Clearinghouse Operations Committee, she has been leading the banking project, an acclaimed initiative of the National Bank of Cambodia in exploring and introducing a new generation of payment systems using blockchain technology. Currently, she serves as the International Council member of the Global FinTech Institute. She is a member of the Southeast Asia Advisory Council of Women World Banking and is a member of Young Global Leaders Class of 2019, a forum of young leaders created by the World Economic Forum. We also have Subnendu Mohanty, the Chief FinTech Officer of the Monetary Authority of Singapore. Subnendu Mohanty is responsible for creating development strategies, public infrastructure, and regulatory policies around technology innovation. Mohanty has spent over 20 years in various leadership roles globally in technology, finance, and innovation. He has co-authored several patented works in areas of retail distribution of the financial sector. Mohanty extensively engages in ecosystems of various jurisdictions on innovation, policy making, and tech-enabled financial services. He is on the institutional investors list of influential fintech global deal makers, recognized internationally as a fintech thought leader, and has recently been named the Market Reformer of the Year by IFL Euromoney. We also have here Christine Catalini, who's co-creator of DM, formerly known as Libra. Christian is the chief economist of DM Association. He is currently on leave from his role as associate professor at the Massachusetts Institute of Technology, where he founded the MIT Crypto Economics Lab and designed the MIT Digital Currency Research Study. He is also a faculty research fellow in the Productivity, Innovation, and Entrepreneurship Program at the National Bureau of Economic Research. Christian's research focuses on blockchain technology and cryptocurrencies, and he previously worked on the economics of equity crowdfunding and startup growth and the economics of scientific collaboration. With a PhD from Toronto, University of Toronto, Rotman School of Management, and MSc in economics and management of new technologies from Bocconi University, Milan. His research has featured in Nature, Science, the New York Times, the Wall Street Journal, the Economist, Wired, NPR, Forbes, Bloomberg, TechCrunch, the Chicago Tribune, the Boston Globe, Vice News, and the Washington Post, amongst others. It's with great pleasure, I also introduce Abubakar Suleiman, CEO of Sterling Bank, and a sponsor of this event, by the way. Abubakar, fondly called Abu, is a seasoned professional with over 20 years of experience working in the banking industry. He is the chief executive officer, obviously, of Sterling Bank PLC. Currently, his top priority is to optimize the impact of financial intermediation in critical sectors that can catalyze the growth and create a future of shared prosperity for all Nigerians. These priority sectors are health, agriculture, education, renewable energy, and transportation are the heart of Sterling. Before his current role, he served as an executive director and chief finance officer of the bank and was the executive sponsor of the bank's non-interest banking business, Sterling Alternative Finance. He holds a bachelor's degree in economics from the University of Abuja and a Master of Science in Major Program Management from the University of Oxford. His previous work experience includes staff advisory at Arthur Andersen Management Training on NBC at NBC International Bank, now First Bank, and Financial Markets Citibank, Nigeria. He is a firm believer in the role of efficient markets, emerging technologies, and small business in unlocking productivity, improving national competitiveness, and driving inclusive economic growth. It's with great pleasure also that I'll introduce Dr. Segun Aina, the chair of the Board of Trustees of FinTech NGR, a global professional, banking professional, internationally rated FinTech ecosystem builder, influencer, thought leader, and respected futurist. He has 3 decades of distinguished banking career, including 6 years as MD CEO with a focus on innovative banking services. Ladies and gentlemen, without much ado, I'm sure a lot of questions are looming, and we look forward to a very exciting fireside chat and discussion today from our esteemed panelists. Everything regarding financial stability is up for discussion today as we work together to ensure a more sustainable and inclusive financial future for ourselves and generations to come. Thank you all for your time and for joining us today. And let me hand back over to Babatunde and the moderator. Thank you.
Okay, thanks, Mr. Bajomo. So over to you, Kamel. It's all to you. You have the show. Yeah, okay.
Thank you very much. Thank you very much, Babatunde, and thank you for doing all the introductions, President. This was great. Governor Rowe, Saray, this is a great opportunity for the broader audience, but also for me to get to moderate this chat today. This conversation, for the first 20 minutes, we would like to have you to share your experience having gone through such innovation that is now capturing the imagination and the curiosity around the world. And as you guys took the lead from different sides of the world, I look forward to asking you and hearing from you and you sharing with the broader audience what was that experience like. So maybe we'll start with you, Governor Rowe, if that's okay. Would you mind, as a central bank leader into the space, what led you to really look at central bank digital currency, CBDC, which is a novel idea around the central bank using technology for digitizing its currency, and it's done in different ways. We hear about wholesale and retail. What was your path? What led you to this decision? And please share also the experience of getting there.
Oh, good morning and good afternoon. Thank you, Kamel. And let me say that for the Bahamas, the central bank digital currency is one plank in an overall process of modernizing our payment system. But we arrived at that juncture recognizing the importance of having an interoperable system with new players. And we wanted to accelerate the modernization of the payment space. And we started out with several very important tenets that we wanted to come across in the modernized space. One, first of all, financial inclusion is very important. And so we are focused on using reforms to make it easier for all persons within the Bahamas, whether they're legal residents or not, visitors, to be able to participate in whatever modern payment instruments are brought forward. We also sought to create a space where new players can enter, but we wanted to make certain that they could participate fully even in the legacy payments and settlement system. And so that helped to drive reforms. What we said is that if we're going digital and we're providing a substitute for cash, think about who has access to cash, or let's say who is not permitted to hold cash. No one. So make certain that your regulatory system addresses the kinds of barriers to access that might often exist in terms of the ease of opening bank accounts, et cetera, but also make certain that you have an outcome that doesn't diminish your standards for financial integrity around anti-money laundering and the like, irrespective of the kinds of financial products that are being provided, but tailor it to suit the risk. In most cases, you're dealing with very low transaction, low risk individuals in the retail space. So make certain that when you craft the customer due diligence and other standards, you're mindful of that, but you allow the risk to be tailored in case you're dealing with larger entities. Also be very mindful of the monetary policy and financial stability issues that have come up. And so we've taken those into account. One of the principles that we said is that it shouldn't matter who individuals in the population decide to choose as a financial product provider. So let's make sure that comes across. And when we say that a person shouldn't have to choose between one provider versus the other because they're trying to chase after quality or some other aspect of services. I mentioned cash. I also mentioned onboarding ease. But what it meant was then if we put the providers in the space, interoperability helps to address that issue because then we focus on certain basic levels of experiences that all users of financial products would enjoy. And from that point of view, as we progressed in our modernization process, and as we identified the regulatory reforms that would make it easier for non-bank payment providers to participate and offer services, we recognized that to connect them together swiftly in a small country like the Bahamas, recognizing the high cost of providing new infrastructure, we were dealing with a public good, and CBDC was the route that we identified to provide that connectivity for all of the providers. And so for us, it is about interoperability. At the same time, it's deliberately not set out to be a rival for cryptocurrency. We're focused on payments. and efficiency in the payment space. And we're very mindful that it's a bit of an upheaval, but we're not too consumed with competing with the traditional banking system. As a matter of fact, we are focused on connecting with the banking system, because we believe that if people are using cash and the mobile phone is the substitute for the leather wallet, then the bank has not disappeared and the deposits in the banks have not disappeared. So I need the convenience of being connected to my bank. And so we've focused, particularly in this very present stage, on the connectivity with the banks. We started the process well before 2019, but in 2019, we launched a pilot, one of our islands. And unfortunately, because of the pandemic, a lot of the in-person interaction that we wanted to experience during the pilot did not happen. So we focused in 2020 on a lot of technology development. And by the fourth quarter of 2020, we were able to release the product to the financial institutions. So they worked very intensively to provide the integration with their proprietary platforms. And today, in the middle of 2021, these financial institutions, about 8 or 9 of them in total, mostly non-banks and non-credit unions, but we have some banks and credit unions in the space. They are now on the cusp of getting into that marketing of their products and services to the population. So now we are also revving up for the public education around digital financial services and how this new innovation can connect individuals, not just to new payment services conveniences, but serve as a delivery channel for new product and services. What I like to say to persons in terms of the future is that your mobile phone is your new ATM. If you think about it like that, you start to imagine some of the substitutability, where the substitutability is happening, as well as how you're looking at complementarities in terms of the new product space. So we're very excited. We're still, in my estimation, in the infancy stage of this process. And the good thing about central banks and public sector is that we share experiences and we learn from each other. So for us, there's still a lot of learning and knowledge sharing going on.
Thank you, Governor. I have some follow-up questions on that would be pertinent specifically to Nigeria and I think to Africa at large. But Saray, would you mind also sharing your experience and how you got started around the project that you did, whether it is a central bank digital currency, and if it is something different, would you mind sharing what was your decision process around that?
Sure. Well, first of all, thank you to the FinTech Association of Nigeria for having me. I will, excuse me. I probably want to give you a bit of background, how we started it. And it started in 2014 or 15 when the cryptocurrency started to make a big wave around the world. And so in Cambodia, what we observed was that there were a lot of companies that were coming in and started to introduce cryptocurrency to the people. And those are called, very funny name of cryptocurrency. And what they did was they were benchmarking their value to the like of Bitcoins and Ethereum at that time. And so what we worried at that time was that people were, that it could be a scam where, you sell these coins to the people who don't know, who don't understand, and who see this merely as sort of a gambling opportunity, not even an investment opportunity, like a gambling opportunity. And so immediately we came out and we say, we don't allow cryptocurrency to circulate in the country. And so in the process of doing that, the team at the National Bank of Cambodia were also trying to look into, what is blockchain technology? Because we banned the cryptocurrency in the first place because we didn't know what it was. It was volatile, we didn't know who behind it, and we didn't know what blockchain technology was at the time. So we decided that we're going to set up a team and look further, because when we were sort of banning all these cryptocurrency, there were a lot of they're welcome sort of people who welcome the initiative, but also people who sort of criticize. And so we wanted to make sure that we made a good decision. So we look into and study what is blockchain technology. And when we were studying blockchain technology, we realized that we could actually use it for our own purposes at that time, which is creating interoperability. And how we come about with blockchain technology was that we were having very fragmented financial system. We had banks who opened banks accounts, and the KYC procedure was a bit sort of tedious. And then we've got the e-payment service provider or the payment service provider who open account, who sort of a KYC process are much easier. And so we see a lot of people in the rural area prefer opening e-wallet rather than go and open a bank account. And what happened is that if you have an e-wallet, it was almost impossible to send money to somebody who has a bank account on the mobile platform. And similarly, if you use a certain e-wallet service provider, you won't be able to transfer money to a different user from a different e-wallet providers. So it was very sort of all over the place. And so we thought that how can we bring everyone to talk to each other, the payment service provider among themselves, but also the payment service provider and the banks. And so we were exploring different technology. We could either choose the conventional centralized system where you've got the payment service provider to open a clearing and settlement account with the central bank, comply with the liquidity management that a bank would normally do. And in which case you would put on additional regulatory compliance costs to the payment service provider. And the reason why we regulated them as a service provider in the first place was we didn't want to have too many sort of compliance costs or impose too many compliance costs on them. And so if we were to bring them into this centralized national clearinghouse, we were just exactly doing that, meaning adding on burden to them. And so we thought that with the peer-to-peer feature of the distributed ledger, we can sort of make a way from having everyone to go to the national clearinghouse. And so how it works is that the banks and the payment service provider, all they need to do is to exchange their fiat money against some digital money from the central banks. And then they can distribute that money to the end users. And end users, once they have it, they can store it in their Bakong wallet, which is freely available. Anyone can download if you have a local phone number. Then the money can circulate around very easily. So that's the first feature of the wallet. The second feature is to also use Bakong as a backbone payment system. So even if I have a bank, let's say I have Bank A mobile phone platform, I can still send money to the service provider X mobile banking platform. And as a user, I don't need to know that it go through Bakong or what, but on the back end, it would channel to the Bakong system. And so the user of the payment service provider, they can only transfer money when they have money in their account, so that the payment service provider don't have to manage their liquidity with the central banks. So that's how we sort of frame our product as a backbone payment system and not as a central bank digital currency. As we were working through this project, we also realized that there are some legal constraints also in sort of framing it around the central bank digital currency, because that means that the liability would sit on the central bank balance sheet, something that our existing law would not allow. So what we did is that we have to change the technology, tweak a little bit, and also change the legals and rules to make sure that the liabilities the central bank is only liable to the commercial banks and the payment service provider, and the payment service provider and banks are liable to their end users. So we sort of limit that liability, and I think that's the major distinction between, a central bank digital currency or just a digital currency. And I'll stop here.
Fascinating, fascinating. So two different experiences. It's clear, we get those questions a lot around central bank digital currency, whether they compete with cryptocurrencies, whether, how do they impact the banks as well. So I think from both stories, we're getting a flavor of how a CBDC or a new central bank innovation can provide and fill some gaps. I'll go back again to Governor Rowe. One of the, I guess, key dynamics around the Bahamas was what you mentioned around opening access to more players. That is something, of course, in other markets with a banking system that is a bit more established. And I know we have a banking association represented here, but how do you think about the impact, and especially for other countries that do have relationship in a banking relationship, how do you navigate that? I understand that Bahamas might be different. Maybe you want to highlight how for the benefit of another jurisdiction that has a banking system that is looking at their central bank introducing something like this.
Well, let me say that the banks, they all have the access to the CBDC platform, and we anticipate that they're going to be, just as innovative in modernizing their payment services delivery. One has to recognize that when we put the emphasis on accelerating the modernization, we have to appreciate that oftentimes banks operate with very complex technology and systems, and so the timelines to get to an endpoint is slower. Also, in the case of the Bahamas, we were starting with only banks in this space. And therefore, if you compare the Bahamas with other countries where the fintech or related innovations were happening, this was an opportunity to provide the regulated space. And in some respects, it is really just good fortune around timing, because as we created the regulated space for non-bank players, we were immediately able to identify the kinds of new infrastructure that could solve the interoperability issues. And by the way, I was at one of the international telecommunications conferences, I think around about 2017 or thereabouts. And these issues were coming up, and I was speaking with some of the delegates there. And it was at that time that I was very preoccupied by these issues and becoming very sensitized to how other countries were looking at it from the point of view, in many cases, of shoving the problem to an industry and asking them to develop the standards. So this was an opportunity for us to leapfrog over those concerns, but also, like I said, to bear in mind that we were not yet a financial system with as many developed variety of players. So from that point of view, it wasn't path-breaking compared to the status quo in some of the other countries.
Thank you. I think that's valuable, and that's a big distinction. And the access itself and the focus around financial inclusion, I think also creates an argument around how do you provide, and maybe taking the legal tender, the paper cash that you're used to, that is used by people who are banked or unbanked, and providing a digital version of that. We heard the US Congress talking about that a couple of weeks ago, as far as taking the cash version or the cash rail and digitizing that, which is also another way of looking and not competing with banks, it seems. But Suraj, maybe you can expand on a bit more on the cryptocurrency considerations that you had to factor in, and the fact that it is very clear that you wanted to use distributed ledger technology, and you've done enough research at a technical level to have an appreciation for the difference and feel comfortable as a central bank to come forward and say, we're using distributed ledger technology. It is a response on cryptocurrency and the dynamic around cryptocurrency. What has been the maybe the experience or the feedback since you rolled this out on the benefits of technology, of DLT, and comparing that to cryptocurrencies?
There were a lot of confusion when we first banned the circulation of cryptocurrency, and then we announced that we're doing something using blockchain technology, because at that time blockchain and cryptocurrency were the same thing. And so we would say, but why you're banning this and doing it yourself? And so we have to come forth and explain the differences, that blockchain is technology and crypto is a product, and so on and so forth. So confusion is one thing, and I think the reason in the first place when we banned cryptocurrency, it's consumer protection was our main concern. People don't understand what they're buying. People don't understand what are the risks. And so at the same time, the regulator don't know what these, a new product are. And so the safe word, and so the safest way to do when you don't know and nobody knows in the country is to just put a stop on it and then go and study, not just, stop it and do nothing. We stop it and we studied. And when as we start studying about the technology, we realized that there are a lot more potential to blockchain. And to be honest, I was confused initially between, what is blockchain, what is crypto, is it the same? And so we start looking into this. And as I mentioned, the reason why we adopted the DLT technology, and the technology that we use behind our project is Hyperledger Iroha. Is that, first of all, we were comfortable with it. We co-developed the technology with a Japanese company. The team were comfortable with the language used. They were comfortable with the business model of it, and it explained to us. And I remember when we explained to our management, which obviously elder generation than us, about blockchain, and the first questions that came was that, so what is this technology? And I remember it clearly when I said, oh, it was created by an anonymous guy in Japan and we don't know who he is. And that was the wrong answer to it. And so we had to sort of come back and look at it again, and explain it clearly to our management what it was and what are the potential of using such technology. So there were a lot of challenges, and to us also, and as Governor Rowe mentioned, is, when you are in a developing country and nothing is actually really working well, as I said, very fragmented system, the implication of the systemic risk on this kind of project is quite minimal, or at a manageable sort of level where you're not going to disturb anything. At best, you're going to create something new and innovative and it worked. At worst, you would just maintain your status quo. And so that was the reasoning when we decided, let's go and do it and see what happened. And we also had very good support from the private sector. The banks were very keen in this new project. The moment they hear blockchain, they go, I'm in it. So yeah.
No, thank you for sharing. And I think the insight around blockchain technology, distributed ledger technology, compared to the cryptocurrencies that the central banks are still trying to wrap their minds around. I know specifically and relevant to Nigeria, that's a distinction, and that's an education part of it. So I think that this panel and this conversation, this event is part of that. So thank you for sharing. And expanding the conversation now into our other speakers and other panelists. Subnendu, thank you for and welcome for joining us. I'd love to maybe go back to you as another central bank leader, and we'll expand into Christian from DAM and Abubakar from the banking sector, and kind of understanding what are the thoughts, what are the players really seeing into this space. So Subnendu, do you mind sharing, Project Uben was a landmark around the CBDC journey and what we're talking about now. Maybe you have a sense of how did Singapore go about getting into this space, but also what has been the ecosystem response and to the project. And the last piece is, of course, any thoughts around blockchain and the technology itself? and then we'll open up to the others.
Sure. Well, I'm going to give you only incremental information to what Governor and Assistant Governor has given us. So so that we don't repeat ourselves on the thoughts they have shared. So let me take a very different. I've almost changed my thinking on the fly based on your question. So let's look at the future of financial services. I think if you look at 10 years from now, we believe we could be hugely mistaken. The future of financial services is going to ride on something we call as Web 3.0 tech stack, which is essentially a combination of machine learning, AI, IoT devices, quantum computing, cloud computing, DLT, all the structure. And this tech stack is going to drive three big diversion or change to the financial services. One is financial services are not going to sit inside a banking portal or a banking system. It will sit inside the endpoint of digital endpoint where you and me interact, whether from a travel site or an e-commerce site or a lifestyle site or a hospital or a medicine or a medical site. So that endpoint, you'll get our financial services. So that's embedded finance, and that will run on all the latest cloud computing, AI, machine learning, everything you talk here. IoT devices driven. When you drive a car, based on your driving speed, you get insurance offering based on your behavior. The second track is around decentralized finance. That's where today's discussion becomes interesting. The decentralized finance are not in the sake of decentralizing central bank, but decentralizing the very nature of how you think about financial services, which means it contains three or four things: programmable money, programmable codified regulation, programmable instrument linked to your digital ID, and the whole package becomes decentralized finance. And to get there, we need all the innovation what Governor and Assistant Governor spoke. Either you need some form of digital currency. It could be in some country, there's a need for retail CBDC. In some country, don't call it retail CBDC. It's a digital currency, an avatar of a commercial bank looking digital now. But you need those structures. Now, so from Project Ubin perspective, our journey was to get there. And let me bring this into context. And the third bucket, just for sake of completeness, is green finance. We are going to start financing more brown assets to green assets so that the world is going to be more sustainable, and we will have the same tech stack working on the third bucket. Now, Project Ubin started in 2016, and our objectives was quite different what we heard now. Our objective is that Singapore is largely bank country. Almost everyone has a bank account. We have a faster payment system in 2016 or 2016, which is quite fast in the instant payment system, no issues. But in 2017, we introduced a platform called Pay Now. And it changed the way we pay each other in Singapore. Today, we pay each other in Singapore in 3 clicks. All I need to know your mobile phone number or your national ID, 0 cost, no cost. I can send money to each other using banking rails. We also started experimenting, real production. Can we connect this system to another country? So we worked with Thailand, and we spent 2 years, and we went live this year, where the same payment system, where I can pay to somebody in Singapore just by knowing the mobile phone number, 3 clicks, 0 cost. Can I do this same with somebody in Thailand? So today, for anything below $1,000, I can pay somebody in Thailand just knowing their mobile phone number, same 3 clicks. But here is the difference. I cannot do 0 cost anymore. There's a real cost of sending money overseas. There's an FX cost, there's a settlement cost, there's a processing cost, and there's a compliance cost. But we overcome some other costs. So today, after we connected, before the connection, to send $100 from Singapore to Thailand, it used to cost a small migrant worker $15, $20. And if they have to send money cheaper, they have to go to illegal channels, which will sometimes is not that cheap either. or they can go to a fintech company who may charge $8 to $7. But with this new connection, we brought down the cost to $5 to $3. The question is, can this cost be $1 or less than $1? I think the answer lies with wholesale CBDC. If we can share, we can create a central bank wholesale currency, and we can create a shared ledger. We can make atomic settlement between two countries. We can make the settlement process nearly cost-free. We can reduce settlement risk. We can actually programmatically create smart transactions, which can also embed AML, KYC, sanction checking. And we can bring down, but arguably we can bring down the cost of transport to below $1. To me, that was the objective of Project Ubin. How do we get there? And to do that, we have to get the basics in place, and we got it now. But we need an infrastructure which can issue this dollar, which can move this money. So this year, Project Ubin moved from experiment to production, not by central bank. And this is where Sherry's argument makes fascinating argument here, that it goes to commercial banks systems. So a new infrastructure was created called Partior, a joint venture between JP Morgan, commercial bank, DBS, commercial bank, and Temasek, a sovereign fund. They came together, they put a market infrastructure, which will now allow commercial bank to use digital currency to do wholesale payment, cross-border, domestic, put all the smart contracts in place. They can do exactly what I just explained. And they're using the Ubin code base to make this production infrastructure. So that's the logical journey from where we moved from Ubin to market infrastructure, traditional rails, traditional compliance expectations, and how do we get to the ultimate, I said the ultimate nirvana of cross-border sub-dollar cost to transfer. And with all the good work Sarah and Governor John has done in those countries, I think we may get there faster than what I can see than what I would have thought otherwise. So this is a short description of how do we end up there. But let me also take a few seconds to connect to my opening line, future of finance. So now the decentralized finance becomes more real. Now we have an infrastructure where we can embed a digital currency to a financial instrument, and that can actually make the one of the future of finance endpoint, decentralized finance, a real outcome. So that's how I think I have reasonably connected with all the dots together.
No, that's very, very good description of the opportunities. I think to capture two things that you said, getting the foundation done. I think each of the countries working domestically and getting that digital currency and that infrastructure set up, it is needed for financial inclusion, for example. So talking to Governor Rowe, there's a way to not particularly impede on the banks. We need financial inclusion. We need to digitize cash. That currency itself becomes an instrument that can be used by banks, by other financial service providers. And Christian, I want to pull you into this and say the fintechs also have a role in this. But then you talk about cross-border payments. This is why the central bank, in addition to just creating the digital currency and letting the commercial banks also use it, but that wholesale role needs to be provided, and that can happen in instant cross-border payments. I was actually working a central bank.
Before Christian calls me out, let me tell. So that I want to preempt him. I don't care whether it's CBDC or commercial bank digital currency, as long as it solves the problem. Sorry, sorry, Christian, all yours.
So welcome, Christian and Abubakar. What you just heard from the central banks is a evolving and new ecosystem that involves a central bank being part of a technology shift and also creating new business models. What does that mean for a bank? Abubakar, would love to hear your thoughts on this. And then Christian, what is this evolving role that fintechs can play here?
Thank you, Camille. I want to start by clarifying that there is no debate about central bank digital currency ongoing in Nigeria. The only debate we are having is about Bitcoin and the opportunity to participate in the new wealth that is being created. and to some extent, the opportunity to use that as a substitute for the dollar. So that is the conversation that is ongoing. And therefore, it's really important that we clarify that. I think that the conversation around the central bank digital currency is one that is more fundamental, and in a way is one that I think is inevitable. And I start by saying that to the extent that cryptography is superior to the most advanced printing press, this conversation has to happen anyway. And that advancement doesn't just happen because of the security that cryptography offers against counterfeiting. It also is important because of the efficiency that programmable currency offers relative to fiat as we know it today. And in a way, this conversation really shouldn't be a conversation. It is just the natural progression that has been brought about by technology. Unfortunately, when we start this conversation, however, we seem to be so overtly focused on the role of cryptography in payments that we forget that the banking system actually goes beyond payments. I think that like Singapore we think that the payment system in Nigeria is actually quite advanced. It is instant, it is relatively very safe, and the cost of payment is actually tending towards zero. My sense is that we've seen, despite a double-digit inflation over the last 20 years, the unit cost of payment is actually in Naira terms down to about 10% of what it used to be 20 years ago. So essentially, the payment cost is sort of tending towards zero. So there is that clarity in my mind that the journey from a mobile payment system to a digital money system will be very swift in Nigeria. The adoption shouldn't be a problem at all. When we come back to the role of financial institutions, if we were to implement a CBDC, I think that the payment side of it is where most of the impact will stay. I think that the risk underwriting function of a financial institution remains very critical and is one that can be enhanced with digital assets, that can be enhanced with digital identity, but it's not necessarily substituted. So there is an opportunity for us to refocus on risk underwriting and therefore to provide credit to the economy. And the last comment on that for me is that in a sense, the battle for digital currency at the global level seemed to me to be a battle between the reserve currency like the dollar and the alternative currencies, right, including cryptocurrencies. That is not necessarily going to affect what is happening at the local level. What I worry about, and I think I'll put it out here, given that there's a lot of experience, is that we seem to be building what I would call a self-driving mechanism, right, for what is still essentially a horse-drawn cart. So the economy that we are running and that we currently have to deal with requires a significant amount of reforms before the efficiency that is created by what we are creating can really be harnessed, because it's not going to solve for the problem of inflation that we face. It's not going to solve the balance of payment that we face. In fact, when you have trade and the obstacle to trade are port infrastructures that have not been updated in a century, then you really are not going to gain more by improving on the payment system, because the payment system already can support the physical flow of goods. You have to deal with the physical infrastructure issue. So while we have this conversation, I just want to remind everyone that as far as Nigeria is concerned, we've got a dual problem, and digital currency may help, but I think that the impact is highly muted because of the other problems we have to deal with.
Christian, over to you.
Thank you. So first, I want to clarify that I think everything that's been covered so far will be really important and necessary for making progress. So I'd like us not to think of all these different categories as substitutes. I think they're all complements, whether it's CBDC innovation, wholesale, eventually also experiments maybe on the retail side, and a lot of what's happening even in the fintech space. In the case of DM, I think we made it really clear that we see CBDCs as the future and something that we want to build services and applications on top of. But we also realize that journey will take potentially multiple years in different regions. It may take different forms depending on different choices that different governments make. And when it comes to experiences like remittances and cross-border, it's very difficult to deliver value to the end consumer. So if you actually focus on the needs of someone that's trying to send money to family abroad, it's unlikely that some of these changes will materialize in the time frame that I think we need them to. So where DM enters the picture is kind of in retrofitting kind of the older fiat rails with faster digital asset and digital payment ones. That doesn't mean that, if a CBDC becomes available, you cannot replace something like a DM dollar token with a digital dollar issued by the Fed. I think just yesterday, Vice Chair for Supervision, Randy Quarles, gave a really important speech where I think he was trying to outline some of the interesting tensions between kind of the public sector innovation and the private sector one. And in his speech, he was emphasizing that public and private are actually complements. And in fact, you can imagine delivering a lot of the benefits that we described to CBDCs through more private sector innovation. If you kind of roll back the clock to the early days of the internet, I think some regions of the globe, including the United States, got innovation on the internet right by realizing that it was the commercial internet that would eventually really close the gap for consumers and businesses. And after decades of public sector R&D that created the infrastructure, that created kind of the backbone, you could have all sort of experimentation on top of it. So where that leaves us, I think, is that it's important to lift the quality standards for projects such as ours that are proposing stablecoins as a way to close the gap in payments, and especially global payments. There's a number of important concerns when it comes to consumer protection. When you look at the stablecoins design that are live in the market today, actually none of them I think is up to par when it comes to thinking about a run risk, when it comes to think about stress market conditions. Some of the projects have very little transparency in terms of the quality of the assets backing these dollar stable coins, and also haven't gone through the motions of thinking through more canonical banking and financial services frameworks such as Basel III, right? So if you're trying to really defend that peg, well, you need to ensure that when you're issuing a dollar coin, it is at all times backed by high quality liquid assets, and then additional capital requirements and buffers. So when you look at the broader stablecoin landscape today, I think one of the challenge that comes from a consumer perspective is that many of these claim to be dollar substitutes or essentially as stable as holding physical dollar. But many of the economic design are prone to dead spirals. So especially the ones that use kind of their own governance token as part of the reserve are particularly problematic because any change in expectation would drive any of those stablecoins down to zero very quickly, or have not gone through the motions of what does the design need to be able to withstand at scale if there is an economic shock. So we think that that's the first category of important issues for any of these digital assets to reach mainstream adoption, especially in retail. The second one, of course, is financial crime and compliance. When you have networks that support unhosted wallets are a fantastic vehicle for financial inclusion, of course, because they're really lower barriers to access. But I don't think we have the right complementary innovations when it comes to identity standards to really ensure that they're not going to be abused. And so on one side, I think we're seeing a lot of innovation in cryptocurrencies and blockchain, but the key challenge is that without new frameworks for delivering on compliance, going back to the point that was made before about wholesale CBDCs kind of bringing in some of the protection that we're familiar with, I think we'll also see a rise in financial crime. So that's another important area that any of these experiments in the stablecoin space will need to meet, I think, so that they can deliver a safe experience to consumer. So at a very high level, it's really fascinating to see innovation across all of these different streams, whether it's the CBDC one, and so kind of that public sector layer that I think will be important to support all sort of innovation in the fintech space. Wholesale CBDCs kind of bringing some of the more traditional banking players into this area. I don't think that's going to be enough because to some extent at the end, the consumer will experience this in a mobile phone or in a feature phone. And for that, you need private sector innovation, and you also need entry. I think one of the challenges with just innovating in the wholesale space is that the players are the same ones that we've come to know for many years. And so there's nothing special about the technology itself that would suddenly deliver more competition and more innovation. For that, we need to fundamentally change market structure. We need to allow startups and new players to come in and provide services at a low cost. We need to innovate on identity standards so that we can really close the last mile on financial inclusion. So there's a lot of work to be done, and I think a lot of these changes will not happen, unfortunately, overnight. DM is just a small piece of that picture. And in our sense, where we're trying to add value is in both signaling very clearly to the public sector that what we're doing is seen as a complement to CBDCs, and we've actually committed to taking out our token and replacing it with a CBDC token, if that's what makes sense in that region. And second, we also want to be an innovator when it comes to the overall design of the network, because we think there's a lot of improvements that can be brought into the stablecoin space, both from an economic design perspective and from a financial crime and compliance one. So that's kind of what we're focused on, but I'm happy to discuss further with all of you today.
Okay, thank you very much. Babatunde, I'm going to assume we have a couple more minutes for a few questions. Is that okay? So I wanted to piggyback.
Okay, I mean, we can do another 15 minutes.
Another 15, okay, very good. I wanted to piggyback on a couple of things that Christian mentioned and also Abubakar around the reforms that are needed. I think we started from a technology perspective and from a use case perspective, but maybe Governor Rowe, given that you are kind of further along in your journey and the changes that you might have had to do as far as working with your team and working with the broader ecosystem to get any legislative, any regulatory changes in place. What was the experience and any thoughts on what the team is bringing up here? Because there is a need to address also the non-financial aspect and how does the digital currency now impact the other industries?
Thank you very much. Excellent question. And let me say that all of the points that Christian made and Abubakar made are excellent ones and accurate. We're improving on infrastructure, and we have to think, yes, payments is one element in the financial system. Intermediation is also important. And if you look at it, the payment system today is important in all of the other aspects of financial intermediation. So they are not being pushed to the side. And yes, we are definitely, from an acceleration point of view, introducing new players into the space, and that helps with some of the changes. And we cannot view this on any level as competition. Although I've said to the banking sector that it can look a lot like competition if you don't respond fast enough to the needs of the consumers. So you also need to be thinking about how you adapt in terms of how you deliver your product and services as the infrastructure changes. From the regulatory space, that is where a lot of the work has focused in the Bahamas. So we did go through the process of amending the central bank legislation to deal with the issuance of digital currency. And let me say then that timing was also favorably on our side, because changing laws is not a swift process in any country. But we were already working for at least half a decade on draft updates to our central bank legislation. So at the last instant, we inserted provisions literally months before it went to Parliament to deal with CBDC. And those provisions created an opening for regulation. What we focus on in regulation are some of the technical issues around the infrastructure, because we're trying not to mix high-level principles about our payment system into a focus around a CBDC infrastructure. So we talk about interoperability standards and cybersecurity and all of the other fixations around the infrastructure. But at the same time, we stay focused on our payment system regulations to address financial integrity issues, AML, CFT, et cetera. Also, to use that focus to begin to push a lot more for a consumer protection side of this, because there's a lot of work that is happening there. One of the areas where we haven't touched yet, but we flagged it, is that a lot of the changes that have happened in the financial system in recent decades have suddenly made it harder in the Bahamas and some other countries for minors and others to establish banking and other relationships. And if you go back to the point that I made earlier about there are no restrictions on who can hold cash. And so we realized that if we're not careful in going digital, we may omit the fact that that part of the population also needs to be able to participate on some level. Of course, that hypes up a lot of the consumer protection and data privacy issues, because in my view, you have to be even more aggressive as to how you assert the data privacy rules around minors in the financial space than adults. But we are focused on making even more changes in the regulatory space, and particularly signaling to the sector the areas in which we think there needs to be reform. Identity is a big issue for the Bahamas, and some of our early work at the central bank is really only going to address the electronic KYC needs of the financial institutions. But we are very supportive of the push that the government is making to develop a digital national identity infrastructure, because then that will reduce some of the burden that the financial institutions have around some of the, the basic KYC issues that might go into establishing relationships. So the identity infrastructure is one of those important areas where the innovations. Also going to be very important, I think, in regards to the cross-border aspect. I think that's where we're going to get really, I think, lost in all of the issues around standards. So it's going to be very important if we're going to succeed with the work that's going on in Singapore and elsewhere, that we do a really good job of cutting through the issues and agreeing on the standards that need to be adopted across countries. But we are making, in my estimation, a lot of progress on the legislative point. And I expect that in the case of the Bahamas, sometime during July, we'll release our first iterations of the regulations that we've very widely consulted upon just for CBDC. Because as I said, payments issues, we try to make certain that they stay centralized in the payments infrastructure, which is getting its fair attention as well.
Thank you. Thank you for sharing. So I want to talk a little bit about AFCA because there is a big conversation around the opportunity of central bank digital currencies and digital currencies more broadly around trade. But a quick question, Saray, the wallet that you mentioned that was available, is that a wallet that's provided by the central bank itself? Just curious.
Yeah, it's a wallet that was an application that was developed by the central bank, and it's freely downloadable by actually anyone, but you can only register if you have a local mobile number. But to the point of just now, Subnendu was mentioning, it doesn't matter whether it's CBDC or stable coins, as long as it's achieved the target. And I fully agree with him, is that at the end of the day, it's about trust. Right. I come from a country that is heavily dollarized. So 85-90% of our economy is in US dollars. And so even if, for argument's sake, we were to issue a CBDC in real, which is a local currency, I don't think it's going to change anything because, people prefer dollars. And so this is the reason why in our project, people can choose to actually transact in local currency as well as in US dollars. Also, to the point of Abu Bakr mentioning about, why we're talking about payment and we forget about other services of the banking industry. I think payment is the entry point to a formal financial service, to access formal financial service, because not everyone has money to save and open a bank account. Not everyone is in need of a loan, and not everyone can understand a complicated insurance policy, but everyone make payment transaction on a daily basis. And if you could digitize those transactions and create a digital footprint where later banks can better understand the payment behavior of the people, then you would reduce this information asymmetry between banks and client. And most of the time when banks don't want to lend, it's because they don't know their customer. And if you're able to create that kind of history, you can make access to credit eventually easier for these people. The second is that when you make it digital, it's also help for the central bank eventually to, when you have access or financial inclusion or inclusiveness in financial services, you diversified away from a concentration of financial system in a few players in the economy. And therefore, it's much easier to maintain stability because there's less concentration. And the third is that when you have this, a digitized sort of information, it's easier for the central bank to conduct its own monetary policy because you can see clearly, the transmission mechanism of your policies. I mean, if you were to inject something, you can see, and again, here I'm talking in theories. It's not like we're doing it. But this is the entry point. And I think, of course, there's a lot to do, but it's a promising work, and we should develop more.
No, thank you. This is a good segue into maybe Abubakar, if you were to jump in on here, as far as what are the roles, what is the role of a bank in the middle of Africa if the central banks issue central bank digital currency? I have this theory that I've been running around in my head for a couple of years now, imagining several major countries issuing CBDCs across the continent. And what would that look like? What would that do for trade across Africa? What would that do for MSMEs that are unbanked? And the reason I picked on Surrey for a little bit to get a clarity around the concept of a central bank providing essentially what I could call a cash wallet, probably, and a basic access to payment. I remember when I had the opportunity to participate in the pilot for the Bahamas, it was the same concept. You could get the app, you could get the card, and that's a way to allow entry and inclusion. So across the board, you're seeing kind of evolving use case around trade here. And the access for the little guy, but also the role of the banks. So what does that mean in Africa? What roles do you imagine here?
Thank you. I sort of want to first start by agreeing with Siri that payment is important, but it highlighted something that for every country, the challenges you face and the opportunity are so different. So for instance, in Nigeria, we have maybe roughly 40% financially excluded that are formally financially excluded. And that's a problem we're dealing with. But of the 60% that are included, less than 5% of them actually have access to credit. So you can see that, sort of different problems at different times. But to step away from that and go to AFCT, the opportunity that arises with CBDC for Africa trade is real, but I think it would be a mistake if, for the purpose of Africa trade, we are thinking of issuing 54 CBDC and sort of integrating them to create a payment platform. I think we would be taking some of the mistakes of the past systems and sort of optimizing obsolescence, as it were, and sort of building on that. Why do I say that? What does it take if we're at this point, at this critical point? What does it take to have a single CBDC for Africa that will drive trade? And then we can connect the rail of each and every country to that. That is probably a wiser architecture than one where we wait for different countries with different standards at different levels of development trying to build CBDC and then hopefully integrate. Imagine 10 of the countries or half of the country have CBDC, the other half have not yet decided on what to do with it. You face the same problem of integration, where you then have multiple layers of integration between the CBDCs and the fiat currencies and all of that. So if there is one thing that we can learn in Africa, is that there is an opportunity the same way that we are trying to create a single trade zone where there is seamless flow of goods and services. We need to think of the payment in the same way. And because there are easy ways for us to create a CBDC that would simply enable trade and not much else, and that's fine. And I think it also saves us from some of the concerns that Christian has highlighted about the cyber risks that are sort of coming up on board now. So you start with what is essentially a wholesale CBDC that is intended to drive trade, then you cascade down to the SMEs, and eventually it could end up as a retail CBDC, but at least for now, it would be a mistake to have 54 CBDCs integrated for the purpose of driving Africa trade.
Very good, very good. Christian, any thoughts on that?
I think, a lot has been really already covered. One thing that I'd like to add and maybe stress is that it's going to be extremely important to drive towards additional regulatory harmonization, right? For all of these networks to actually deliver value to end consumers, especially when you think about cross-border use cases. it needs to be that those frameworks are somewhat compatible across those regions. Otherwise, there's dimensions like settlement finality and privacy and other requirements that will recreate the fragmentation we have today in payments. And so there's as much technical work as there is, I think, regulatory work in really trying to create those frameworks. Of course, the FSB group on stablecoins was probably part of that effort, but there's a lot more that I think needs to happen so that we can reach really those goals of lowering the cost of remittances and cross-border payments at a global scale.
Very good, very good. So do we want to do some Q&A now? I see a couple of questions. I see one relating to AML and CFT. One question says, how can CBDC enhance the supervision of anti-money laundering and CFT? Anyone wants to jump in and take that?
I think the question is, it's not CBDC per se will do it. In fact, it is the smart program where the CBDC is embedded will have the necessary code which will allow that atomic transfer from A to B. And within that smart contract, there will be a smart instrument. There will be a program which will do your online checking, online screening, KYC, and will instantly transmit that message to all the recipients. So that's how the KYC will be done. Once you do, we don't have to repeat in every stop the money goes, because already embedded in that piece of code. I think that programmability of that instrument where the CBDC is embedded is how the KYC will be addressed, and to make an atomic settlement rather than debit trade happening at different corresponding banks.
Sure, very good point. And I'd point people to a paper I think the US Fed posted earlier last week around programmable money. I think I did a really good job breaking down what is a good benefit of embedded governance and how you can embed governance into payment systems and payment infrastructure with the use of blockchain and distributed ledger technology. All right, another question, I think it's for you, Governor Rowe. It brings up the concern that financial technology might bring more financial exclusion than inclusion. If you agree, what needs to be done at the government and regulatory level to go around these?
Well, a part of the issue around financial inclusion is access to technology. So in the case of the Bahamas, we know, for example, that we have to do continued work on access to data for mobile communication and improve the general quality of the telecommunications infrastructure. When we piloted our CBDC, we gave users the option of using a mobile phone or to pair their account with a smart card. So it meant that for individuals who were not as receptive initially to using the mobile phone technology, this was a way of easing into the space. I think the issue around inclusion will have to do a lot more, not so much with access to the phones and the technology, but whether we have sufficient of the assistive features built in so that those who might have some challenges, maybe vision impairment or other impairments, that they can use the technology. And in those cases, I think in the Bahamian situation, I see it as less of a challenge. We've already determined that at least 90% of our adult population have access to and are using smartphones. We don't think it will be as much an education around how to make a payment, just given the way in which, even in the social media space, we've seen people make great use of their mobile devices for communication. So focusing on the simplicity and accessibility of the technology, we think is going to be very important. But relatively, also consider where you're starting from, because in an island setting in the Bahamas, depending on where you live, you have a bank account already and you have access to online banking. But if there are some parts of your services that require the in-person interaction with your financial institution, because cash comes into play at some point, the quality of that service can be greatly diminished. So sometimes the financial inclusion statistics even can understate, how level or even the playing surface is. So going digital, even if you cross out CBDC from the conversation, but going digital in an equal way is also a way of addressing some of the inequalities in financial access that already exist in countries such as the Bahamas.
It's good to hear that. So the investment in financial inclusion as well as digital inclusion is what's an underlying mechanism here. And let me take the opportunity, because there are some countries that are thinking about offline transaction and offline payments and how to provide infrastructure for people who don't have access to the internet. And we kind of stumble upon the fact that Africa has been doing that for years. This is not new. And the innovation have been and started in Africa, actually, when it comes to determining how to get payment to be done over a mobile network infrastructure. But Abubakar, we're getting quite a few questions on your comment around for one CBDC. And people want to know, how do we start that conversation? Given that we have 54 different countries, the same issues around issuing different CBDCs, wouldn't that be an issue on them accepting and agreeing to using one CBDC? So maybe you can kind of expand on that. That seems to have caught a few people's attention.
Well, I'm glad it did. That was what I was hoping for. To be fair, I think that the Afrexim Bank and some work from the AFDB is already sort of tending towards that. They're looking at creating rails that can then serve for transcontinental payment, right? So that sort of infrastructure thinking is already there. Now, the sort of thinking that can lead to a single CBDC is the same thinking that will lead to a single currency for Africa. It's not going to be materially different. However, if the use case is primarily trade, then the complexity is reduced significantly. So we could have, for instance, a wholesale currency whose primary objective is to allow cross-border payment, across the countries, but it's essentially open only to people doing cross-border trade, and it's not available for other sorts of transacting. That could be a starting point, because that simplifies some of the complexities that we have to deal with a single currency. But my thinking is that this technology sort of compels us to think differently about intra-Africa payment. It simply compels us to do so because anything else that we do is going to be more complex, more expensive, and doesn't achieve the objective that we have. So I think that a bank like Afrexim Bank and some of the other continental institutions that we have should really be the one to lead this sort of conversation, so that it doesn't become a national conversation on one country versus the other, on one block versus the other. And I think that is a great starting point. I'm confident that they will come to the same conclusion, that for the purpose of Africa trade, we do need a single CBDC on which we can then hopefully to grow to become something else. It may not start as a whole currency in terms of how currencies perform at the starting point.
Thank you for that. So that is definitely starting the conversation. I think you'll have a few people thinking as Nigeria and a few other countries across the continent are exploring this. Ladies and gentlemen, it was my pleasure to moderate this conversation. I hope the audience got a lot of insight, and thank you for sharing your experiences. Dr. Sheguraina, I'll pass it on to you to conclude. And thank you again for everyone for sharing. And this was a great conversation.
Thank you very much, Kamel. This has been a very wonderful session, very informative. And I'm sure everybody has found it very, very interesting. And it's very appropriate to, commend and thank everyone that have participated in this, the panelists, yourself, moderator, and, the president of the FinTech Association of Nigeria. It is clear to us that CBDC is the way to go for the future, in line with the emerging technologies that we have now all over the world. After all, CBDC is just using technology to represent a country's official currency in the digital form, to improve the effectiveness and so on and so forth. And of course, we talk about the benefits of that. It's wonderful to have these experiences shared from other countries that have done it, across the globe. And these will be useful lessons for Nigeria and other African countries that, some of whom have announced, going to have CBDC. Countries like Ghana, Morocco, Egypt, Kenya, South Africa, Uganda, and of course Nigeria, that have announced that they want to do. So at the national level, we need to be able to dimension it properly, learn from those that have gone far, even though for many countries it's still early days yet. So we need to learn from each other. And I like the focus also on the on the inter-African trade, especially the African free continental trade area, which is also very, very important for us, for the Nigeria and for Africa as a whole. The challenges that we have in Africa in terms of multiple currency, we have about, if you pack the 8 CFA zones in West Africa and the 6 franc zone in Central Africa, we have probably about 41 different currencies in Africa today. So even if each of these countries, just like Boya said, have their own CBDC, how does that impact the free trade, the trade within African countries? And that's why there's a PAP system, a Pan-African payment system that is being championed by Afrexim Bank, which actually is based on a digital platform. So we need to be thinking at how this can be integrated into a central digital currency for Africa to fast track and facilitate inter-African trade. And this is not a job for just Afrexim Bank, it's a job for Association of Central Bank in Africa, because there's an association, they need to be able to come up with some policy framework on that, to work with the Pan-African payment settlement system, to work with regional institutions, to work with ecosystem, the fintech ecosystem in various countries, like the Fintech Association of Nigeria, and of course, the Umbrella Association for Africa, which is the Africa Fintech Network, which connects all the fintech ecosystems in various African countries. And the fundamental challenges that African countries have will still be there, whether we are running CBDC or the communal, in terms of access to digital. We need to do a lot in terms of digital financial literacy, digital access that have been mentioned. And I believe that if you leverage on the experience of others, we will be able to, as Nigeria, as Africa, leapfrog, and do things that are peculiar to Africa, using African technology to solve peculiar African challenges that may occur in the CBDC, when we talk about interoperability and the multiplicity of the economic zone, 5 economic zones in Africa, and the currency. So it's been very, very useful. This is just the beginning of the a conversation, and I'm sure there'll be series and series of these as we move on to see how Nigeria and how Africa can interconnect, can create a central bank digital currency that will facilitate trade and ensure growth in those countries, which we really need. And of course, very great linkages with other countries across the world. So I want to thank everyone for being part of this, and particularly the organizers. It's been so informative, so educative, and I'm sure a lot of things have been learned, and we hope to be able to continue the conversation as I mentioned earlier on. So thank you very much indeed.
Thank you very much, sir. I would like to say thank you to Governor Rowe, to Subnendu, to Seri, to Kamel, to Christian, and to our own Abubakar Suleiman. Thank you very much. And thank you, the participants, for joining us. The recording will be made available for those who have requested for it. Thank you and have a great day. Bye.
Thank you.
Thank you. Bye-bye.